Alright, so in this video I will go into detail on how I find assets or pairs for scalping or swing trading. So I'm just going to jump right into it and not waste any more time. Let's begin. Okay, so here are some key factors you have to keep in mind. Just know that I use them pretty interchangeably, so it just depends on what I'm seeing and what I'm not seeing. So number one, liquidity. Make sure that the asset you're looking at has high trading volumes, tight spreads, deep order books. I mean, it's pretty simple. Just make sure that the asset is known to be a liquid asset. All right, it's really easy to find. Just Google it or just use some of the most common assets like gold, Euro USD, GBP USD, so on and so forth, right? Number two is volatility, predictable intraday patterns, small oscillations, moderate with clear trends on 4-hour/daily charts. Now, you don't have to be confined to the 4-hour or the daily charts. This is just something I recommend to do when analyzing the asset, right? So I usually do like to start off with the 4-hour, and then sometimes I'll work my way up to the daily, or sometimes I'll just start with the daily and just stay there. But every now and then I'll use different time frames, so I'll explain that as well in the examples. I'll show you the time frames that I use, but it's more than enough to just use the 4-hour and the daily. Number three, technical indicators. Now, you don't have to use these if you don't want to, but I do recommend them if you're new or if you're having problems trying to find what assets are good to scalp or trade with, right? So for instance, moving averages. If you see that the moving averages function really well with the specific asset that you're looking at, and you pair it up on the higher time frame, so if you were to use a 50 period moving average on like the 4-hour, and you notice that it gives really clear trends, it functions really well with that moving average on the higher time frame, then it's probably going to be easy for you to scalp it on the lower time frame, right? So this is just an example of how you can use indicators for this. Number four is transaction costs. So make sure that you have low commissions, spreads, and fees when trading, whether you're swing trading or scalping. Usually it affects you more if you're scalping. So I highly recommend that when you do look at an asset, go on like the seconds or the 1 minute time frame and see how the spreads look like on the specific trading window that you usually trade in. So make sure that if you're trading during, for instance, a New York kill zone, that the spreads are typically lower on that specific time window. All right, anything outside of that time window wouldn't really matter. Okay, now number five is technical analysis. So clear trends or clear support and resistance levels, chart patterns if you use chart patterns, etc. It's really important that when you're looking at the asset that you want to trade with, that it's easy for you to identify these things. If it's really difficult for you to identify like support and resistance levels or even order blocks, then I would highly suggest you move on to another pair that's way easier to identify these things. Obviously, I'm going to show you some examples, guys, but that's just something I really recommend that you guys use as a key factor in determining whether you should or shouldn't trade a specific asset. And lastly, number six, fundamental analysis. So supply/demand. When I say supply/demand on the fundamental analysis, I'm saying look up the supply or demand for that specific asset. So if there's a big supply or demand for like a Tesla stock, then make sure it aligns with your technical analysis, right? Look at the news. So if you're a Forex trader, go on Forex Factory, see if there's NFP or anything like that, or just red folder news. And if you know that your trading strategy doesn't work very well with red folder days, then you should avoid trading on those days. Or if it does work well on those days, then I would suggest you trade on those days, right? And this really mostly affects swing traders because now you're implementing fundamentals to the asset. Now, I'm not saying you can't use it alongside with scalping on the lower time frames. You can, but it's not that useful. All right, the only thing I would say is useful is just checking the news on Forex Factory to see if it's going to affect that specific day you're trading on. All right, so if you have any questions on any of this stuff, please join the Discord, ask me questions there, or ask me questions in the comments. I'll do my best to answer you guys there. And yeah, let's move on to some examples. Okay, so for this example, I will be using gold, and I'll be on the 4-hour time frame. So what can you tell? It's very easy to tell that it's bullish, right? It's going to be very easy for me to mark up my charts. So here I will just use this here as an example. I have my high here, clear breakup structure, right? And then what do I have here? A market structure shift, right? We have a breakup structure towards the downside, or you can also call it a change of character. Pretty easy, pretty simple. And then from here, what did price do? Tapped into this fair value gap, right? Or to make it even easier on us, we could do what? Draw a fib from this low here or this low here, but I'm just gonna keep it simple. I'm gonna draw up the fib from there. And what can we tell? Price was in a discount, tapped into this really big fair value gap, and then started going back up, breaking structure towards the upside one more time, right? And usually the spreads, as we know, is pretty tight on this stuff. So that's what I want, guys. That's what I want to see when I'm looking at an asset, to see if I'm going to swing trade or scalp. It just depends on what I want to do for that day. But these are just the small little things that I look for when it comes to selecting what asset I'm going to trade. Obviously, I don't recommend anything that way too slow because it's going to be choppy. And I'm going to show you an example of what that will look like in a second. But if you can't mark up your charts clearly, and if you can't tell obviously from looking at it that it's a pretty bullish asset or a pretty bearish asset, then I would suggest you just move on to another type of asset or pair, right? Because you have to be able to mark up your charts, guys. If you don't mark up your charts on the higher time frame or lower time frame, you're going to have a very difficult time finding trades. Okay, you need to be able to know that the asset that you're looking at has very clear and obvious structure. I know that it sounds like I'm repeating myself, but it's very important. Okay, it's very important. Now, you can use more things other than fair value gaps. You can use order blocks, you can use breaker blocks, you can use support and resistance, whatever you want. Just make sure that you are able to mark up your charts clearly and easily. It's really that simple. Now let me show you an example of what asset I wouldn't personally trade. Okay, so for this example, I will be using the US dollar / Mexican peso for this. So again, I'm on the 4-hour time frame, and what can you tell? There's no direction of trend, right? It's very hard to tell because you have some breaks of structure here, and then you have another one here, maybe this one as well, and then you have another one here, right? So it's a little difficult to tell where price is actually headed, right? Because you have a breakup structure to the upside, and then you have one down here, and then you have two more going up, and you think, okay, we're officially changing direction to go towards the upside. There shouldn't be another reason to go down, and then all of a sudden price goes down, creates a breakup structure towards the downside, and now it looks like we might actually be going down, right? But we don't actually know. It might go down a little bit more. It might create more structure towards the upside. We don't know what it's going to be in the next coming days or weeks, right? And if you go back even further, I mean, look at all this choppiness, right? It's very difficult to tell. So if I, right off the bat, can't, just by even looking at it, determine whether something's bullish or bearish, that's it. That'll do it for me. Now, some people can trade this, but if you are going to trade a pair that does not have much structure to it, I would much rather you go down to a lower time frame, like the 1 minute. The highest would be the 5 minute, and just trade it on there. Why? Because you can get in and out quickly. You might be able to look for some quick liquidity sweeps, and then maybe enter off of a market structure shift. I don't know, but it's just not a pair that I would personally trade. That's all. And if I were, I'm definitely going down to like the 1 minute or even seconds time frame, just to get in and out very quickly. But yeah, like this is not something I would recommend. All right, so let me go on to one more example of a good asset to trade with. Okay, so another one that I have been enjoying to trade lately has been the Hong Kong 50. mainly because I've been trying to trade on the lower time frame. So a strategy on trading for the Asia session on the lower time frame is going to come out. I just need to finish refining it. But yeah, I mean, it's very easy to trade with. I mean, up, down, up, down. It's very obvious where this thing is going, right? It's going towards the upside. Obviously lately, because of all this tariffs, things have been going kind of crazy. But even before that, I mean, it's very obvious. You could tell where it was going and where it probably wasn't going to go. And I mean, just a great pair to trade overall. I've enjoyed it so far. I haven't actually tried trading it on the New York session. It's been doing very well on the Asia session. But yeah, I mean, even if it is like slightly choppy, I can still tell where it's kind of going, right? Because I have these small breaks of structure towards the upside. It's respecting price down here, right? Doesn't really touch anything else. It's been doing pretty well. So it'll touch these like rejection blocks. And again, more breaks to the upside here. You got another one here. It's very, very easy to trade with. I like it. I can tell if price is going to be bullish the next day. If it's not, I mean, just really nice pair or asset to trade. I have enjoyed this, to be honest with you. And if it ain't this one, then usually I like to trade gold euro as well. Gold euro is pretty cool. It's a little bit more volatile, but I mean, overall, it's pretty easy to trade. I mean, see what I mean? It ain't nothing too difficult. So make sure, guys, again, that when you are looking at an asset to trade, it's very easy to identify market structure. It's very easy for you to mark up your order blocks, your fair value gaps, whatever the case it is that you're looking at. And if you do have any questions on this particular video, please let me know down in the comments below. As always, I will do my best to answer you guys. And if you haven't joined the Discord, please join the Discord. It's free. I'm there. I will do my best to answer whatever it is that you've got going on. I also have some pretty cool updates that I add on the Discord that I don't add on my channel sometimes. So definitely join the Discord. It's free. You lose nothing. You lose nothing. All right. I will talk to you guys in the next one. Peace.